Hello and welcome to this weekend's technical analysis video looking at silver gold, the gold to silver ratio, and starting off with this unofficial Shadow Stats government adjusted silver chart. Inflation adjusted, that is. And it is the first day of December, so welcome. We are looking at 100 years of silver adjusted to Shadow Stats numbers. Now, they're trying to say even this year or the last little while, last year or so, 6% inflation. I look at inflation in that of money creation and how much the supply is compared to what the supply was before. And then the symptom of inflation is that of higher prices. But even throwing that aside, everything that I'm going to be showing you for prices, other than the gold to silver ratio, is that in US fiat dollars, which is appalling, in my opinion, how people would want to keep this instrument rolling on that guarantees debt, especially with interest levels as they are, and they're aggressive to, well, aggressive levels. However, people have a free choice and free will, and I'll talk more about free will in the next video at the start of the week. So let's get started with silver, and we'll look at the monthly chart first. This month, silver had a gain of 3.6% after it lost 6.5% in October. So therefore, I'm going to talk a lot about this sideways consolidation range. I have these two lines, which are Fibonacci retracement lines. If you take 61.8%, which is the golden ratio, multiply it by itself again, you get 38.2. 23.6, and the opposite of that is 76.4, and the opposite of 84.5 is 85.4. So that's the Fibonacci numbers that we're using, but it's 76.4 from the $4 lows well below here in 2003 to this high. So 76% of the way up brings us here, which is the same as 23% down. And then again, the 85.4. So these lines are working out very well and stating that the range that it's in, as long as it's in this sideways consolidation pattern, then you can say it's in an indecisive mode. You got these bands that are going towards us. I am so glad that I know how fiat currency is created, because the vast majority of people whom are looking at silver charts don't realize that. It's an advantage to know how it's created, in my opinion. As far as the chart analysis is concerned, of course, within the breakout of this, you're looking for this area to become support. You're also looking for test within the previous level. Okay, let's shorten this out a little bit and bring this now down to the weekly chart. Now, we're going to be talking about all these Fibonacci levels, every single one, at the end of this particular video. There's like 10 of them, I think. I did it up yesterday. Anyway, I've talked a lot about these lines, so on and so forth. So you made this lower high from here, which was fine, as long as you make a higher low and follow it up with a higher high. Whether this is a higher low is, quite frankly, fairly irrelevant. For if the downward move were to continue something like this, then I would consider not this to be the low, but rather this, in a pattern of that nature. So that's why if you end up seeing that this thing breaking down below this low, yes, it's an area to be concerned on the short-term time frame, or maybe excited if you're looking to get low 20 pricings, or even back to the 25, 26 area. However, again, I'm going to be looking for 61.8 from here to here, and quite frankly, anything below even this area here is where the concern for me would really start coming into tuition. Okay, we'll now shorten this out again and move this on to the daily chart. What we're seeing with the daily chart is the lows of 26.12 from the summer and the highs of 35.40. We don't have a 38.2% retracement. If you've been watching my older videos, you know it is 31.5. Thus, you had that failed breakdown below there and the fast move. But now things are looking a little complicated. Well, definitely complicated Definitely messy as another word. Is well, we have the same Fibonacci's that we were showing on the monthly chart. As you see that you're trying to get above this, and now we've had one test along here, looking for another one. But it's obviously, after having this breakout, coming down and just extending this much, it's one of those headaches things. So again, until I guess this thing settles out a bit, I don't know how the short term is going to be playing out. Let's adjust the Fibonacci without adjusting the chart from here to here. So let's do that now, and there we have it. So now we're looking from point A to point, well, I got different letters for it, but for this case, the high to the low. Situation where, of course, that you stabilize on the first level and then got above the first one, and now it's finding support in the last 3 days. On 2 occasions, decently piercing well below it. Again, that's causing a lot of headaches. So now let's take a look at from this point to this point. We'll do this by looking at the 5-hour chart. Each one of these candles representing that of 5 hours. So you can see here you make this high, all these higher highs and higher lows, but you make this high from this low, you know what, it was lower than this one. So now when I see a lower low to this, what I'll do is I'll go, okay, so we have this low here now, and we have this high. So this is the low from the whole move. Again, sort of like we were showing the weekly chart. If it comes back down here and then back up, I'm going to count this the low and not that as low. So some sort of in that pattern like that. But even after this low, you make a higher high, and now it's yeah, still this could be a higher low, but again, the retracement much deeper than you would be looking for. So anyway, let's look at the Fibonacci levels now instead of the end of the video. They'll move it on to gold, finish it off within the gold to silver ratio. But before we look at that, I did put a setup in here for silver. I put a new stop in at 33.11, which it stayed above, but if price is greater than 34 after entry, which it was, then 69% retracement from low to stop is the play at 33.38. So the Fibonacci from here to here meant your stop was right here, which obviously shows it got violated. Thus, within the game, it's another small loss, bringing the record to 1 and 3. With one win being a very small loss. This is a 1/3 of a percentage loss. And there will be a play, and it's just for a fun game anyway, within the gold to silver ratio later on. I'm surprised there's no ETF for it, but before we look at the ratio, let's look at gold. No, actually, no, let's look at the ratio first. Then we'll look at gold. So this is the gold to silver ratio, the 47-hour chart. It's going to move to 48. I just want to make sure that this low is on the left-hand part of the chart. And I'm going to keep using this Fibonacci level until it has a clear break below this low or a clear break above this high, with the February highs being on the left start of this chart. If it's another year or so and we haven't got by it, then it'll be a 100-hour chart or so. However, with that being said, this low got breached, and it's now a breaking back higher. Now, I did some numbers. That 50 and a third, and I did my video showing it was around that level. It was actually an area where there's a decent chance of it bottoming out. For example, let's do some math here. We got the high of 59.23, and we're going to divide it by the low of 47.72. Okay, so now we're going to put to the retracement. We want the 23.6, which is what the next one is, and then we'll multiply it again by the low of 47.72, which would give us a price objective to about okay, throw that idea, 21, which is, no, don't throw it away, which is right where it was. Now, also, I want to point out, too, that when I do this chart, I'm only getting a tick every hour on the top of every hour and nothing else in the other hour. So, if, say, at 22 after it goes down here, I'm not going to get it. But for the most intents purposes, it's pretty much fine. Let's adjust the Fibonacci from here to here, and I'll show you what I mean. I'm going to go to the 6-hour chart, which means in this one, there are 47 additional ticks from the open. This one is only going to be 6 additional ticks. So you're going to really tell the difference on the chart when you see it. We see a lot of closing at the highs and the lows like we are seeing it. Therefore, this is what we're seeing here, and there's a little breakout above here. Now, in a situation here, if it goes down lower and either keeps going, then obviously the trend's in play, or if you make a lower high, those are the types of things. But don't be surprised if we at least make a run for this level here. So with that being said, as far as the next setup is concerned, let's just bring them in. Okay. So we have the Dean Foods, which it's probably going to be a while if it does get executed. Okay, so here we go. This is the must. It must not surpass 51.68 and then retrace 69% from 50.32. So what does that mean? It cannot go past here and then go like way down here. That's pretty much all that means. Okay, so with that being said again, let's go to... it must reach the range of 51.92 to 52.08 and be in the 18 average of the last chart. So it has to be within that average. The stop would be 53.18, with, of course, the reserve to change it. 53.18, of course, is above this line. And it has to, this is where your first profit would be, 50.32. And again, this is nothing more than a game. I'm using the time frames that I use here, which is from Duca's copy. So any other charts that show different numbers, I'm just going to ignore. Going to use the levels that I download myself. Okay, so that is it with that. Before we go to gold, I want to go over the Fibonacci numbers on silver, just to help understand Fibonacci just a little bit better. So the closing price was 3341.25. And I'm going to put these decimals in because I'm going extremely long term and extremely short term. If you want to go more longer term, you got to go centuries. And if you want to go more shorter term, you got to go microseconds kind of deal. Okay. So this first one is active for 80 years. The low, which is point A, and I'm not going to refer these letters later on, but just for this video I will. 25 cents, that was 1933, actually it was 32. The high, $50 for 1980 and 2011. So the key Fibonacci level, 661, and it's very bullish right now, well above that level, because that's the 61.8%. It has to hold above that for it to be bullish, and it's doing just that. Number two, so we got the same high, but the low has changed. That's a multiple hit low of around $4. It meant multiple times. Even though it went to 355, we'll just use 4. Okay, so it's well above the key 19 level, so again, it's very bullish. Number three, this is active for a year and a half. The low 26.11 hit multiple times, although sometimes it was 26.12, sometimes it was 26.15, whatever. And then the same high. So from that level there, it's exactly at that key level that we're talking about. So obviously it's scary if it does not hold, but currently that level is neutral to bearish. It was bearish. And of course, if it can get going from here, breaking 35, it'll go to neutral, and it really needs to get above 40 to go bullish. Number four, this is the one that's been active for about half a year. This is a daily chart, basically. Number five, active for 2 months. I've already shown this one already today from the low on November the 5th. Number six, the one active for 2 days. Number seven, this one has been active for 4 hours, and you can just read them yourself if you're interested from this point on. Number 8, active for 34 minutes, and number 9, active for 12 minutes. Multiple time frame analysis. Let's go down to gold. Now, gold for the month was actually, I gotta fix this. This should automatically be red. I'll fix that for the next one. It was down for the month, barely though. Whereas silver was up a little bit. Now, of course, the monthly chart for gold is much more bullish than the monthly chart for silver, and there's not really much more to explain. It stayed well above this 18 average, which has barely flattened and mainly went declining. There's a little bit of flattening action here. There's a little bit of flattening action here, but it's pretty much been going straight up. You have this upward move. Let's just maybe use a straight line instead. But you have this upward move, and then you have a little bit of sideways consolidation. So now you're playing within the sideways consolidation. So the Fibonacci that matters within gold is right now, they got the low 252 from the 19, same as the silver $4 low, and then this high. So it's holding extremely well. So the only levels I care about now are from here to here. And we can see this via the weekly chart. So let's open up the gold weekly chart, and then we'll move it on to finish it off within the daily chart. Here we go. So you got this high and you got this low. Well, we can see it's neutral because it's within this band. And this story is pretty much the same as silver. Again, if this thing goes up and then down here, talking from this point to this point, I'm not going to count this low as a low. No, I'm going to count the new one. But again, it really has to hold. You can see that looks like about 1630. 1630 is extremely important to hold. Breaking this, ready to get going. What's ideal is a break there, even up to above here, and then at this point, either one of two things to occur, either A, to continue skyrocketing, or B, to come back to this level and then back, something like that. Okay. Next Fibonacci levels from here to here, that's the daily chart. So let's move it on to just that. This will be the final chart. I'm going to say right now, thank you for watching and have yourself a great day. Just before I end this, because it's something different. Yeah, so here we go. Same thing. You have the failed breakdown. It really hasn't had much of a fast move, and it's still, you don't know, because this just might be that possible failed breakout pattern right in here. Which is it going to be? Because as long as you stay in the range of about 1700 or 1698 to about 1735, then you're in that sideways consolidation of which pattern is it going to be. If this is the failed breakdown, I'd expect at least a test of this level, but even maybe a further retracement. And of course, if this is the failed breakdown, I would expect at least a test of the previous high, if not again, a break above that level.